we're seeing about 20 million square feet of demand for leases for AI-driven companies, okay? We don't create bad assets. The real estate sells itself. The token layer is an additive to it. Like if you have power, you have a leasing immediately. I don't care what you build. You could build a mud hut. If you have power, you'll get it leased. The whole tokenization world, we know where it's going, and it will be a liquidity layer for these family offices, where previously your lockup period was 8 to 10 years. Now all of a sudden I can give you options where it's like, look, in 2 to 4 years from now, I can give you a certain amount of the capital you can cycle back through, start to redeploy without selling the assets on hand. So I think...
Hello, innovators, entrepreneurs, and risk takers. Welcome to another episode of Web3 with Sam Kamani podcast. I'm here at the Castle Wallet stall or booth at the Bitcoin Vegas conference, and I'm recording this live. Going to be interviewing the founder of Castle Wallet, and he's going to be sharing with us on why we should be looking at this product and how it is different compared to everything else out there in the market. As always, before we get into this conversation, I would like to say that please do not take any of this as financial or investment advice. And as always, please like, share, subscribe, and follow. So Mitch, welcome to the show. It's great to have you here.
Thank you for having me.
Looking forward to talking about Steelwave and everything that you guys are building in this space. Just to give you a quick background about myself, been in this space for a very long time. I've been running this podcast for the last 5 years, interviewed over 400 founders, everyone from Vitalik to lots of L1s, L2s, protocols. And I was a founder before. I still angel invest sometimes.
That's super cool.
Once or twice a year in the right,
That's awesome. Hey,
in the right startup.
You've seen it. You know the good and the bad, so
Yes,
it's awesome.
Yes, exactly. So I get to talk with a lot of founders. First question is, like, before we get into everything that you guys are building, how did you get involved in this space?
Yeah, no, I never thought I'd get into real estate. So I went to school. I founded a hedge fund that traded crypto volatility.
Yes.
When I graduated in 2020, I kind of realized that there was a big void in the space of real institutional grade product, right? Of high quality, especially stuff that, international institutions could scale into.
Yes.
So I went to my father who runs Steelwave, and I was like, look, you guys create, super cool real estate. Why don't we bring your real estate to a market that's starving for high quality assets? And that's really what started the ball going down the road. So now I've got the entire real estate company behind us. We're very excited. But yeah, I got in early. I saw what the space needed for it to grow and scale, right? For your institutions to play, for your regulators to come in, there needs to be product that people get. So we're just trying to provide that.
Awesome. And tell me a bit more about Steelwave. What's the key problem that you guys solve, or that you identified that you wanted to solve?
Yeah, I mean, Steelwave, so my father, it used to be Legacy Partners. He took it over in 2016, Jersey change into Steelwave.
Yes.
What they do is they kind of create the campus style, the super high quality real estate of, Google or Anduril or groups like that.
Yes.
And I was like, look, if we can take your product and bring it into a market that needs it, you can really open up doors, right? Because in the real estate space, especially as developers, we're handheld by our LPs, right? So we build these super cool assets, and the capital recycles eventually, and they want us to sell it. But for us, we put in so much effort to build it, why wouldn't we keep it on the balance sheet and sell off, the cash flows? And that's what really started getting our gears turning of, I think tokenization will open up this private asset class that previously the minimums were so high, it's who you knew. So that's really what started it all.
That's fantastic. Earlier we were talking about real estate, and you mentioned about Westfield downtown in San Francisco. Can you share a bit about that?
Yeah, I mean, look, I think in a lot of our markets from 2020 to 20 now, it's been a real estate depression. Call it what you want, right? The values are completely off, and for us, the reason is institutions are sitting on the sidelines. Your normal capital partners don't want to go into real estate because they got completely burned during COVID, which opens up a huge avenue for a lot of these high net worth family offices to come in and play, especially the international ones where they previously couldn't. And that's really where we're like, look, if we can take an asset like real estate and democratize it in a way where your everyday person sitting in, Mogadishu or Singapore can put their money into something that's scalable, that's something we
Yes.
want to provide. So, I mean, look, for us on the real estate side of it, it's the best buying opportunity we've ever seen. We're going in crazy return rates for product that we've developed and made very high
Yeah.
quality. But we need like-minded capital to go along for that. So it's been a mix of both worlds.
Yeah. Um, Let me share a bit about like on my side of experience and what I have seen happening in the on the institutional space, because I invested in a startup in the institutional space, and then I was organizing events. So we'd take like few investors on a yacht trip and do things like that, and to attract institutional capital. And what I saw that there is like such a huge demand for US based assets, and it starts first with equities, like because it has been democratized in the last 5 years. So pretty much every sovereign fund, every major sort of retirement fund, investment fund overseas can now easily invest in the US equities. But the road is not the similarly easy if they want to invest in real estate. It's a
Exactly.
lot more complex, and most people don't even know where to begin with and
100%.
how to begin and what, like, because real estate is often seen that, oh, do I need to be a resident of that country? And those sort of questions arise, and that US visa process is not easy at all. Like, so it's not something that people even consider. Whereas equities, you could just invest in an index
100%.
fund. And like I have retirement fund in New Zealand, and that retirement fund, 80% of that whole, what we hold is like in that is
Oh, yeah.
US equities.
What we see is, look, people can play in the U.S. equity space the way it is. It's been existing for a while now.
Yes.
Usually our minimums are 50 million. It's you have to be accredited on certain levels, institutions, sovereign
Yes.
wealth. So it really takes an asset class that it was really gate kept for since forever, right? So like you have this private asset class that's got a
Yes.
massive scale, and you're dealing with company like, for example, right? We have a deal down in Orange County. We bought the LA Times printing facility, and we redid it, and along came Palmer Luckey, right? And it's
Yes.
Anderill's facility now. But that's like the perfect example of like, hey, we can open up assets like that where international investors can play on the actual real estate itself on companies that they would want to buy anyway. So for us, it's taking something that previously I was never able to go to some guy in Dubai and go, hey, you want to come in for this deal here in this area at this cash flow, without going through all the regulatory hurdles, paying everyone off. Like you have to. Now it's changed, which is why the U.S. is slow to happen here, right? Because everyone wants dollar-denominated assets.
Yeah.
It's being gate kept on purpose, right? So that's why you see a regulation slowly coming around, but you're seeing the innovation happen outside of the U.S. coming into the U.S. for the asset. So I mean, we're trying to play that fine line right now, but we're like, if we can provide the high-quality assets, then everything else will fall into place. But without the assets, nothing can happen here, right? So,
but would you fractionalize it at all, even further, or will you keep 50 million as the minimum?
Oh no, we're going to totally split it. I mean, for me, our goal is to democratize it fully,
Exactly
right?
Yeah.
I don't think that can happen to start, right? I'm not going to be able to go, hey, here's a $400 million deal. I need to go raise it from retail investors in 30 days so I can close, right?
No, you can't.
Exactly. So realistically, what we're thinking is, if we can find, 2 or 3 like-minded family offices to come in and buy the deal and go to them and go, hey, we're going to provide tokens for your liquidity in 12 to 18 months from now that you can sell into the open market, right? Because once you own the asset, you can sell coins out. So we're going, look, let's put an on-ramp for these international family offices to come in, and let's give them an option to get liquidity through tokens where no one else is thinking like that. And that's where we're like, look, we know it's not going to happen from your retail investor first, but we know the retail investor will create the market. But the only way for that to happen is you have to have the assets to create that market for them to come into. So you have to buy them with like-minded asset partners that have capital to like, look, we see where the space is going. We know where regulation is. Let's buy the assets to make it so we can do that.
Yeah. No, it's just I didn't even mean retail investors, even accredited investors. Some of them are worth only like in liquid assets 2 to 5 million.
Right.
They might not be able to participate. They would be able to participate if the minimum ticket size is, I don't know, like $500,000 or something like that. Because even if they don't want to put all their assets in one basket. So that's how family offices generally think.
100%.
They
And they have the
diversify.
diversification of it.
Yeah,
This
yeah.
is just a new on-ramp for them to do that, right? So we're basically giving
Yes.
them an asset that they previously didn't know they had access to. We're like,
Yeah.
hey, private real estate asset here, kicking you a 14% current return with low
That's
risk because
amazing.
it's Facebook is your tenant.
Yeah, yeah,
Previously, there was no way they could play in that, right? Well, you could go
yeah.
buy a REIT, you could buy a private REIT, but even still, it's pretty
Yeah.
handheld. This is basically taking the positives of a public REIT and the
Yes.
advantages of a private REIT and putting them together. So now you
Yeah.
can have access directly to the deal, but sell it as if you're in a public market.
Amazing. And like, how do you guys monetize this for yourself? How do you guys make money out of this?
I mean, for us, it really makes us developers, it's a
Yes.
permanent form of capital for us to go do things that we want to do, right? We're not going on a deal basis going, hey, we need to go find a joint venture partner of what we
Yes.
need to do. Here's their buy box. Here's where we want to do it. This allows us to go, okay, we're going to go do what we're really good at, and we're going to provide that for the market in coin offerings
Yeah.
while still doing what we're very good at. So it opens all the doors we get asked for. So we're excited. And I think the more real estate firms start to see that this exists, the more it's going to happen, right? It's going to be
Yeah.
a snowball effect because, if you look at Hines or you look at these big real estate groups, their core assets on their balance sheet, they could be making money from it right now, but they have no idea that this
Absolutely.
even exists. So I think
Yes.
as you start to see that come in, you'll start to see it scale
Yeah.
very fast.
I mean, this is something I don't know, and some of the audience might not know. But so I have a question around this. You're based in the Bay Area, and I've been quite involved in the VC and the whole startup ecosystem. And then some investors, like, they don't have the deep pockets to invest, so then they come together and form like an SPV to then go and invest in the
Exactly,
startup,
yeah.
because the deal size would be like Anthropic. The other day came, deal size is 5 million, but there's like a group of 50 angels. They might each put 100K or something, and then they might. Can someone do similar with you guys?
I mean,
or
what we're thinking is the way we're structuring this is kind of like the next generation SPV. Now all of a
Yeah.
sudden you're taking that SPV model where you're basically syndicating
Yes.
a bunch of these assets, but you're putting on a global thing where it's like, look, some investor in China, an investor in Africa, an investor in Australia can come together in
Yes.
one deal and fund it for us. So I think, look, you're going to see that next generation come up pretty quick here, and the
Yeah.
ones that see it coming will be the ones that, get the biggest benefit of it. So, but yeah, I mean, I pitch to people all the time. I'm like, look, we're basically making a next generation SPV, and we're going and buying really good assets that have
Yeah.
a liquidity layer in them.
That's amazing. And once the liquidity layer is on that, and when it is tokenized, let's say 12 to 18 months, where would people be able to participate in that?
I mean, look, I think you'll be able to buy on exchanges, obviously. That's kind of
Yes.
the goal.
Would it be centralized, decentralized exchanges? Do you
We
have
haven't gotten there
any-
yet. We've talked
Yes.
about both angles. I think what I can say is I don't think it will be sold in the US first. I think it will be sold to the international
Yes.
markets on the international exchanges before it comes into the US, just because the risk line on doing it in the US is higher, right? You might as well do
Yeah.
a POC out there and bring it into regulators to show them. So for us, we've tossed around quite a few different avenues. We've actually looked at doing it through the public vehicle as well, right? Where you're basically doing a public market, coupon offering, but wrapping it in the deal itself. So I think, look, the tech itself is there, but the way that tech is played into the investment vehicle, we're still figuring out. So
Yeah,
we'll
yeah.
see. And it might be a mix of all the above, right?
Yes.
So
And what is the most challenging part of doing all this? Because I feel like it has got multiple facets or sides. One is getting the properties and the inventory, and then the other side is getting the family offices and the investors, and then in future would be the retail investors to provide that liquidity. But
I'd say that the real estate side of it's probably the easiest. I mean, Steelwave has been doing it for 40 years. We have all of our markets we're very entrenched in. We know deals on market before anyone does. So we're very good at that. I'd say the hardest part here is connecting the next generation of capital to the old
Yeah.
financial structure. They just don't get it, don't want to plan it at all. So it's like, look, we got to make the real estate really sexy to sell to the next gen of investors. So I think that gap is where we're trying to fit. And I think it's going to change here over the next 12 to 18 months pretty quickly.
Amazing. That sounds, very, very interesting. And just talking about industry, what other things have you seen currently in the industry? What are some changes or trends you are seeing currently?
I mean, we step back. We're like, look, if we're doing this for real estate, why don't we do this for things that have a fan base already in them? Okay,
Yes.
Sports teams or TV shows or
Absolutely.
athletes themselves. So we've tossed
Yes.
around, and we have a whole department of us that we're focusing into that. We're going, look, if we can get what we call is the cool assets over
Yes.
here, we'll get the tokens first. Where the scale of the real estate, you get bigger money, you can slowly bleed it in. But I think the sports side of it will hit first because you already have your ingrained fan base. It's more of a sticky thing, right? You have that built in. And I think that's what will start to turn the gears. I mean, look, owning a sports team is like owning a castle back in like the 1500s, right? And this will totally flip that model where it's like, look, now the fans themselves can own it and be involved in the cash flow, how the players are trading, what's up. So I think that's really the up and coming side of it.
Yeah. There are some very niche areas. You should really look into esport teams as well.
Oh yeah, 100%.
And they are worth tens of millions of dollars now, which just like, if someone got into Warriors, like, Golden State Warriors many years ago, and they did do so well financially.
Oh, yeah. I mean, we're looking at even like cricket teams in India, right?
Yeah.
Because that fan base is like soccer times 10, right?
Yes,
they are
exactly.
religious in that.
Yes.
So it's like, look, if we can give that fan base an on-ramp to be a part of that team in a little stickier way, the team likes it, so all of a sudden your fans are more engaged, and the fans like it because now they have skin in the game. So, I mean, it's a win-win on all sides, and we're definitely seeing that kind of scale quickly.
Massive. And the growth has been insane just over the last 10 years or 12 years. It's like you would have definitely got better returns in that than nearly every other asset
100%.
like stocks or anything, like
I think people are
S&P
slowly
500
getting
and
that,
everything.
right? It's like stocks are scratching the surface. It's like
Exactly
that's
right.
what everyone plays in. Once you
Yeah.
get behind the doors of the private markets, that's where your real money comes in.
Exactly right. But it has been very kind of kept in like the IPL in India. It's like, there are so many people with you need a lot of connections and network
You need to
and
know everything. And that's the
partnerships.
thing, is like we're trying to shatter that model where it's like your everyday person can play in this. I think that's really the opportunity.
Yeah, absolutely. And what are you looking for at BTC Vegas? So currently we are recording this live at BTC Vegas. So yeah.
I mean, look, I think the whole Bitcoin community has matured greatly over the last 4 to 5 years. I think the capital is now looking to place itself in scalable institutional assets.
Yes.
And for us, we want to be providing, the highest quality assets we can to this next generation of money. I think what people are starting to see is you can use your Bitcoin in a lot of ways that they didn't think, 5 years ago would be capable, where you're levering it up, you're putting it into assets, you're paying off that. And so we kind of want to sit at that middle ground where we know where the money sits digitally, but we also know where the scale sits physically. So you need to kind of mesh those two worlds.
Yeah, absolutely. And my final question before we finish is around what is your main ask or key ask? Are you guys looking for funding? Are you guys looking at hiring or?
I mean, all the above. I think, look, we are in the scale phase right now. So we're looking for like-minded capital partners that kind of see this. We're looking for people to come onto the team that understand the space, they know where it's going. And we're also trying to find, the right regulatory process to make this done so it stays as the instruction manual of like, here's what this looks like, here's what an actual asset on chain is, here are the requirements, here's where you can sell it. And I think that's the biggest opportunity.
I have a follow-up question actually on that. I said last, but anyway, I've got a follow-up question. So, let's say, I'm currently connected with quite a few different investor syndicates and family offices and all that, and I run events for that and all that. I'm running one in Miami for Consensus
nice.
as well. Actually, 2 events there. And how do you explain to a family office, and what do you say to them in order to convince them?
I mean, for us, it's look, the real estate sells itself.
Yes.
We make very sexy, very nice real estate that everyone wants. The biggest sell is look, the whole tokenization world, we know where it's going, and it will be a liquidity layer for these family offices. Where previously your lockup period was 8 to 10 years, now all of a sudden I can give you options where it's like, look, in 2 to 4 years from now, I can give you a certain amount of the capital you can cycle back through, start to redeploy without selling the assets on hand.
Yeah.
So I think, look, our biggest sell is we're viewing the world where it's going, not where it's been, and we have the scale of the traditional markets. So we have a mix of both. I think that's what they see in us as well.
Another follow-up question to that is, how do you develop trust? Because that is a very big thing for family offices, because for them it's preservation of wealth, and they do business with people they trust. How do you develop trust?
I mean, Steelwave itself's done, over the years, 24 billion of assets and acquisitions. Probably, our markets are all the West Coast markets. LA, Orange County, Seattle, Denver, Austin, Phoenix. And anyone that's in real estate knows us, right? And that's the thing, is that it sets the precedent. Like, we don't create bad assets. We don't have misses. And that's the real estate sells itself. The token layer is an additive to it. But again, our simple goal is I'm giving an on-ramp to people into assets they previously could not play in. And I think that's very powerful.
That is indeed. And like with this real estate market, this is a question that only you can answer here pretty much, because most of the people are crypto people, not real estate. Estate, they don't have the same knowledge as you do. Where do you see the market going for real estate in 2026 for the rest half of the year?
I mean, look, I'll speak to what we're seeing in the Silicon Valley. Right now, we're seeing about 20 million square feet of demand for leases for AI-driven companies, okay? This AI thing is very real. It is not like your previous cycles, okay? Your previous cycles were funded by VCs that came in. Now you have your tech giants like Facebook, Amazon, Google, who control the infrastructure for the AI, right? So your cloud, all these things. So they are scaling like crazy, and we're seeing a massive demand in the Silicon Valley, specifically in San Francisco. And that's going to scale and spread. We always kind of say that tech starts in SF and goes outward, and that has not changed, and I don't think it will. So for us, that's what we're seeing. I mean, look, as rates come down, we'll start throwing, debt. I think a lot of the institutions will come off the sidelines when they see this, but I think we have 12 to 24 months to strike at assets where people won't be playing that normally would. Once they start to see that cycle, then it will be everyone on the playing field.
And do you guys plan to invest in real estate outside of US, or will it be focused mainly in US?
We focus on what we're good at. So our markets, we have, our market officers know the brokers, their kids go to school together. They've been in the market forever. So we stick at what we're good at, and we're really good at it, is our biggest thing. I mean, yes, could we scale? Can we do all this stuff? Sure. I'm sure if there was a deal that came across our desk, I think we're looking at quite a bunch of stuff in Salt Lake City, for example, right? A new market. But I mean, look, I don't think we're going to be opening up a Paris office anytime soon. So mostly West Coast.
That's great. That's fantastic. I know that there is huge demand for warehouses and locations for data centers, especially in US.
Power. Power is what they want.
Yes, exactly.
If you have power, you have a leasing immediately. I don't care what you build. You could build a mud hut. If you have power, you'll get it leased. That's your biggest thing. So, and I think there are states that see that as an advantage, and there are states that realize that it is their Achilles heel. So there's going to be a lot of stuff that goes over here in the next couple of months. But yes, power is king. Data and power, That's where your value is.
That's 100% true. And on that note, thank you so much for your time.
Thank you
It's
for
been
having
an
me. Really
absolute
appreciate
pleasure
it. Thank you
talking
again.
with you. I'm sure we'll connect again.
Definitely, yeah.
And yeah, we'll have to get you involved in some of the other ecosystems and see
love it.
how you
That'd be
can
awesome.
come and talk there as well. So
Well, much
thank you so
appreciated.
much for your
Thank
time.
you.
Good
Thank you
stuff.
again.
Cheers. Thank you so much for tuning in and listening or watching this episode of the Web3 with Sam Kamani podcast. By now, you know the drill. Leave a comment or share this episode with a friend and leave a review. I would love to hear from you. So that's why my DMs are open. Reach out to me, especially if you are a founder building a product in Web3. Then I would love to hear from you. What are your challenges? Is there anything that I can help you or my community can help you with? Thank you once again and wish you best of luck in building your startup or your project.